Hello, welcome to ActivTrades. My name is Ricardo Evangelista, and today we'll be talking about the emerging countries' increased price in borrowing money. We'll also be talking about the Nasdaq Biotechnology Index. We'll also be touching on the Central Bank of India's recent decision to increase the interest rates. And finally, we'll be looking at the IMF's concerns regarding the global financial stability on the back of the hike in interest rates. Emerging countries' borrowing costs have recently risen to above 6.65%, which is over what we had during the taper tantrum, which reached 6.5%. The taper tantrum, as we know, was the period that followed the announcement by Ben Bernanke that the Fed would be tapering their quantitative easing program, and that saw a general sellout on the emerging countries' assets. Recently, we are looking at countries experiencing serious difficulties like Venezuela and also the Ukraine, but not just these. We also have better established emerging countries like Brazil, for example, South Africa and Turkey also under the spotlight. Few equity investments have performed as well as the Nasdaq Biotechnology one. This poses a bit of a challenge to investors worldwide because the growth has been so exponential in the last few months, in the last year even, that they are concerned because on one side they should be taking advantage of this upward trend. On the other hand, they will be worried about the bubble bursting. India's central bank has cut the interest rates for the fourth time this year. India is concerned that their inflation is not at a level they would expect it to be, with the rate currently sitting on 3.5%. Also, growth for the country's economy has been slowing down. Currently, we're seeing a rate of around 7% per year. The IMF is concerned that the expected interest rates rise in the US and other major economies as well may lead to a destabilization of the global economy. With many countries in the emerging markets sitting on large corporate debt, this can lead to a massive failure and a domino effect that will have a very detrimental effect for the economies of these countries and also to the world economy, which growth has been driven mainly by the emerging economies. Today we have Mike Hamilton from Trade the Easy Way with us. Welcome, Mike.
Thank you very much. Good to be here.
Thank you very much for making the effort to come along on such a rainy day.
It's horrible out there.
It's horrible out there. It's the UK, it's London. Mike, we have been looking at what's going on in the emerging countries, and the borrowing costs are rising, and the latest figures point to the current values going over what was the 2013 taper tantrum levels. I was going to ask you which countries are most at risk, but that's not a fair question at this stage because it's really, really difficult to look into each country in detail. So I'm going to ask you something slightly different. Do you think the emerging countries' central banks are now in the better position to deal with the external economic shocks than they were until recently?
I think it's, to a large extent, it's out of their hands. I think the future at the moment is not quite in their control. We've seen $40 billion come out of the emerging markets, from the equity market and the bond market in the last 3 months. So the bond market is essential to a healthy economy. And it's a common misconception that if bond markets are creeping up, then equity markets are in a divergent relationship. Equity markets will die. That's not actually the case. If you look at it over a very long period of time, you need a sustainable, healthy bond market to keep an active, modestly priced debt market and a vital economy. So I think the reason why I think the issue is out of their hands is because I think it's on the shoulders of the Fed, and the Fed are doing a very, very dicey balancing act at the moment. We've seen recently that the IMF have tapped the Fed on the shoulder and said, guys, be careful. Your economy, the US economy, is showing 5% unemployment rates. Yes, there's a good job growth, and it is stronger, albeit maybe not at the pace they want, but it is stronger. So the rate rise opportunity is imminent. Yellen herself has said it's imminent. It's just a question of timing. So the reason why I come up talk about the US in the context of the emerging markets is because I think they are in the hands of what the Fed does, and when the Fed does raise rates, it will potentially affect the bond market in these emerging countries, which will make life difficult for them. And the weaker ones could be very vulnerable. The stronger ones, India, for example, have recently come out and said, look, we know you're going to raise rates, get it over and done with. We can take it. Our economy is strong enough, we can take it, but there are some weaker factors in there, obvious ones like Venezuela and Ukraine. I think the bigger emerging economies will be all right, but the smaller ones could be very vulnerable.
Okay, thank you for that.
And I think also, if you look at the ETF, the EEM ETF for the emerging markets, that's bounced just as the Dow has, just as the US market bounced. So, okay, we've seen this draw away from this ETF from the emerging economies, but there are bargain hunters out there, and there are speculators who will buy that stock at lower rates, and they have proved themselves over recent years. It's not to say it's all done and dusted. So it's interesting to look at that chart and see how that is reacting, just in the same way as the US has reacted over the last couple of days.
Okay. Mike, the Nasdaq Biotech Index has dropped by around 16% in the last week. Are we close to the biotech bubble bursting?
This has been a great sector. We've seen some incredible share rises over the last 12 months in particular. But the fall that was triggered by Hillary Clinton coming out with a tweet criticising an independent company that was bought, and the new owner increased the price of this tuberculosis drug by a multiple of about 6 times, I think, or something incredible. So that spooked the market in what was a very frothy market. I think my attitude towards this market is twofold. I think it is a good market. We've got a lot of, it's a popular time of the year for biotechs because of the conference season. So we tend to see a lot of volatility around this time of the year anyway. I think my attitude towards this market is that if you are very selective with the biotech stocks that you invest in and trade, then I think they are a good way to get into the market. And these dips we've seen have been bought. We have seen some bargain hunters coming on these dips.
You mean looking more into well-established companies, rather than rather than the ones that are still at testing stages?
Yes, if you've got some biotechs that's only got drugs in the pipeline, stage 1 and 2, they're always speculative, always, and can be very, very volatile. If you're on the wrong side of it, it can really knock your account. But I would be very selective. And the biotech, the stronger figures in the biotech and the healthcare sector are getting bought. We've seen them react in just the same way as other sectors, and the lift in the Dow since Friday. So I would be an investor.
Do you think that these companies are overvalued? Are the acquisition prices too high at the moment, according to what we've seen in recent times?
So certain parts of it have got very frothy, yes. So I would not chase the market. I would only buy at a certain price, and if a stock is running away from me, then I would leave it. But I'd be very, very, very selective and make sure. I don't often do a lot of fundamental research. With this sector, I do tend to do more fundamental research as well as technical analysis of this sector, and making sure that the pipeline is solid.
So on the back of what you just said, I'm going to ask you: do you expect a slowdown in this sector in the coming times? And if you do, where is it likely to happen first? Do you have any idea? Or?
I think the biggest problem hanging over this sector is the coming US election. Obamacare really sort of put a bonfire under this sector and really ignited it. But Hillary Clinton has dented the confidence of a lot of investors. So I think you'll be very, very careful with the sector. I would tend to veer away from I would not be too reliant on the biotech. I want some exposure, but not too reliant on it. I would be more inclined to buy the dips in the healthcare sector rather than the biotech itself.
So if you were a fund manager, with large exposure to this market, what would you do?
I think if you look at the charts and Bristol Myers in particular here, the fund, you can see the distribution at the highs. So I think the fund managers were in the process of taking profits anyway. So I think the fund managers would be scaling back at those frothy highs, but perhaps dipping in on some of these dips, on some of these low points.
Mike, we've seen that the Indian Central Bank has cut its key interest rate for the 4th time this year. What do you think has been the motivation behind this? Has it been pragmatism or has it been pressure from the markets?
I think it's definitely pragmatism. There's several sides to this. India's a good, stable economy. It's a $2.1 trillion economy. And the rupee's lost 4% this year against the US dollar. So it's this rebalancing again, but it was definitely on the side of the Indian Central Bank. It was definitely pragmatic. Like a lot of other economies, some low inflation figures coming through. They have been slow to reform. We're still looking for some more legal reforms. We're still looking for further investment in infrastructure. India's got a lot to do, a long road ahead. Yes. But I think it's robust. But I think in view of this balancing act that the Fed are doing and the Indian Bank are wanting to still nurture growth and still foster growth, I think we are still possibly looking for another cut.
So you think that the Indian Central Bank's governor has its eye on what the Fed is doing or planning to do?
Definitely, he has his eye on the Fed and he has his eye on growth. But I think it's interesting to look at the chart of the India 50 index. I mean, that saw a very, very nice breakout pattern, saw a very aggressive buying. So I think it was a larger cut than expected. But the markets have taken great confidence from that, and that's shown in this chart.
That's right.
And I think that's reflective in other emerging economies. So I think.
So you mentioned the size of the cut. So we were looking at 5 basis points in this last one. What do you think is the main reason behind that? Is it worries regarding the rate of growth, which seems to be slightly stagnant on only 7%? Is it to do with the inflation, which is also below expectations? What do you think was the main motivation?
I think there's a lot going on out there. There's a whole basket of issues from China to US rates to Syria. The whole basket. So it's an economy that is very sensitive at the moment, and I think the Indian Central Bank just wanted to react earlier rather than later, just to try and protect that growth and try and nurture that growth into next year. It's still one of the fastest growing economies in the world. They're still looking for some help to maintain a 7% rate, a growth rate, a GDP rate. So I think they're just looking to protect that and ring fence it.
So you think is mainly the main concern here is having a sustained growth of the economy based not just on exports but also on internal demands?
I think so. I think like China, they're looking for homegrown some growth rates. I mean, China's going through this transition, and India's the same. India's not too different. We've got a growing middle class, and they want to make sure that middle class keeps growing and keeps spending.
Exactly. I wanted to ask you what your views are on what remains of the week regarding the economic calendar, news, announcements, and events. What do you think are the main ones?
Yeah, there's 2 sort of data spots I'm really focused on for tomorrow, and that's obviously the Bank of England rate decision and the Fed minutes 2 hours before the US market close. So it could be an interesting day, it could be a volatile day. Well, the week started with the dollar getting the upper hand on the euro and the pound, and you can see from the chart we got the bottom of the screen that this euro weekly chart is really squeezed in this apex, just waiting for some sort of decision and some direction. I don't think we're going to get it at this stage. I think everything is very finely balanced, as we talked earlier. But I think what I'm really looking forward to is inflation next week. We've got US and UK inflation next week, both looking to be pretty low level figures. In fact, the US core price inflation is looking to come in under 0.
But do you think that will have an impact on the Fed's pending decision?
I think so.
Yeah?
You know, as I said on the chart here, you know, would a central bank raise rates in this sort of environment? You know, it is, you know, the inflationary pressures are very low. We've basically got an aging population in the West, particularly the US. You know, the spending patterns have changed, and they are changing, and this is, you know, taking a lot of heat off of inflation. Inflation is just not coming through. Okay, if you strip out oil and food, we are seeing wage inflation. The employment market is tightening, so we are beginning to see inflation that could perk up. It has to perk up, otherwise we are in deep trouble.
Yeah.
And the Fed has run out of ammunition.
Yes.
So this is a very finely balanced market, hence the drop we saw in August. So the timing of the rate rise, when it does eventually come, whether it's December, whether it's March, whatever, it's going to be very, very finely tuned. It's one of the most complex decisions that the Fed has probably had to, certainly in recent times, had to make. So may see some volatility tomorrow, but next week. I think the market's going to hang around until we get this data out of the way.
Inflation figures in the UK and the US. Okay. Well, Mike, thank you very much. It was a pleasure having you here. And thank you very much. I hope you guys enjoy this as well.
Thank you.